following the Bangko Sentral surprise rate cut last October 9. With us now for more is Angelo Taningco, Research Head and Chief Economist of Security Bank. Good to see you again, Angelo. Welcome back to the program.
Glad to be back, Kathy.
Okay, so are you convinced just yet with how the Bangko Sentral decided last Thursday? Because you were one of 10 of the 16 who expected a rate cut. That didn't. That came actually. You expected that there wouldn't be a rate cut, but it did come.
Yes, so it was indeed a surprise and a dovish cut, which implies that the central bank has changed its tone to a more dovish stance, suggesting that more rate cuts loom. And that's because there's now greater priority to underpin the Philippine economic growth trajectory, given that the business sentiment, as cited, is now facing more headwinds. And we understand, based from our empirical research, that business confidence has a positive correlation with the GDP growth. So we see that business confidence recently has been declining based on the survey report of the central bank, and we anticipate further decline in the business sentiment in light of the governance issues, specifically the corruption allegations on government flood control projects.
So if that's the case and it's a little more dovish than you'd expected, how then is that going to review or renew your own forecasts, given that he did say slower growth would mean weaker demand and weaker inflation? Not only for 2025, but also for next year.
So we are, in fact, watching closely the GDP data. And
out on November 7th.
Out on November 7th will be the third quarter. We are still penciling in a 5.4% estimate for the third quarter, not as high as Vietnam's 8.2%. So it seems we are again lagging behind Vietnam, but still to be the second fastest growing economy in the region.
But that gap is actually widening, isn't it? We are still growing second fastest, but we are slowing on our own.
That is true, because we haven't reached our potential of at least 6%. And because, as mentioned earlier, it has something to do with the leakages surrounding our budget, and that the absorptive capacity of our public investments is being strained by these leakages. And at the same time, the business sentiment decline will also hamper capital formation. So those two alone will likely weigh on our near-term economic growth. So indeed, we are revisiting our growth outlook for the medium term. And as we see the third quarter result, if it's a downside surprise or below our expectation, then we will probably revise it to the downward trend.
In the meantime, how is that going to shift capital flows? Because we also have to look at it from the point of interest rate differentials, how it impacts the flow of capital in and out of the country, and also the peso.
Yes, well, clearly, capital markets play a pivotal role on our economic activity. The rate cut that happened ought to boost, say, stock market sentiment. But it didn't. In the knee-jerk reaction was on a negative. And I think today, partly because the growth outlook became less upbeat. And secondly, the external environment became more uncertain in light of the resurgence of the US-China trade tension. So that double whammy, so to speak, from both the domestic and the external sides will really weigh on our future economic performance.
I wanted to visualize that. As you can see on the screen, that's how you're projecting the interest rate differential between the Fed funds rate and our own at the Bangko Sentral. Is it going to remain like this, or will November 7 be pivotal to show how this trajectory trajectory changes?
Well, for the Fed, they still have two more meetings, one later this month and the last for the year in December, similar to the BSP's last meeting also in December. So we think that regardless of the November 7 GDP result of the Philippines, we think that a trajectory for the remainder of the year will remain. And in order for the rates differential to be at 75 basis points by year end.
Final point, where does peso go as we know that the Christmas season approaches and OFWs remit at this time of the year?
We continue to anticipate peso appreciation in the last 2 months of the year because of the remittances and holiday-related flows. So we are still intact with our year-end dollar-peso forecast at 57.
Got that. That's a silver lining then. Thank you so much. Appreciate it, Jello.
Thank you, Kat.
Angelo Taningco, the Research Head and Chief Economist of Security Bank.